Welcome back to the program. Nigeria's economy is under some measure of stress. Inflation was reported higher yesterday at 9.2% on the same day that Nigerian breweries and Transco reported disappointing first-half earnings. On the same day, Stanbic IBTC, one of Nigeria's largest lenders, revised downwards its own return on equity and loan book growth for 2015, warning that profit in Nigerian banks will be impacted negatively in 2015 by regulatory pressures. Well, if that was negative business and market news to start your trading day, let's broaden it. Now from the office of the Chief Executive Officer of the Federal Republic of Nigeria, Mr. President Muhammadu Buhari himself, you've heard some soundbites about no removal of subsidy yet. You've seen him magnanimous be with the state governments, the bailout for those state governments now topping around $2.5 billion and a few other soundbites from there. So let's talk about how all of this affects you. And the man who is talking to us right here in the studio was the man who spent some of his time the Ministry of Trade and Investment, who was also instrumental to the establishment of Chika Modi's agency, the Competitiveness Council of Nigeria. Tilewa Adebajo is live here in the studio for you. Good morning. Thank you very much for coming. We appreciate that. You were listening at the back office to Chika Modi talking about Nigeria's competitiveness and the state of the economy. Now let's get back to the office of the CEO and talk to us about some of those sound bites and actions and whatever we've had from the office of the president since May 29, and puts all of us together as to what does it tell about the common man, what the president is saying from the big story, strong economics, fiscal policies, upside, and how it trickles down to the main street.
Well, thank you very much, Bosun. Right now, I think what we have been getting has been trickles of information. And if you put all those trickles of information together, it's very difficult to get a clear focus on who is articulating the policies. I think it's important that the office of the president puts together some clearly articulated press releases on the direction of the economy, because this whole process of not saying anything about the policy direction, we understand the challenges they might be having with appointing the ministers, in the sense that they might want to consolidate those ministries, and if they're going to shrink the ministries, then they're not going to need as many ministers. And I think the decision to decide which ministry to put into which might be causing the delay. But the markets and the financial markets and the economy cannot wait for that. We started this discourse in December, if you remember, when we started to engage with channels, and we've had discussions over the last 7 months on the economy, the impact of government, what programs has to offer, who has to offer what. And right now, we're at a free fall. We have the JP Morgan has given us a warning saying that Nigeria will be removed from the JP Morgan bond index by the end of the year if we do not resolve our liquidity issues within the Eurobond area. So that itself is not a very positive development. We have shaved about 1.1% of our GDP. So elections are not only costly for Nigerians, in the sense that the amount of money that has been spent, obviously that might have gone into the economy, but the cost to the economy is that we've lost about 1.1% of our GDP growth, which is pretty significant.
You raised two major issues, but I'm going to start with the first one in the last few minutes, your comment here. The first was the soundbite from the office of the president. You was talking about articulation and coordinated press release. For example, we read in the newspapers that the president says XY things will be done about the economy, and it's the media aide that is saying that, not a government official, if you want to put it that way, if you classify a president's media aide as a government official, who was either elected or appointed by the president to say, look, you can speak on the state of the economy. So we keep quoting sources that we attribute to the president himself. Do you think this is a little bit of a problem from the office of the CEO, or an issue that worry investors locally and overseas?
Yes, because clearly there is no articulation of clear policy direction. The central bank cannot be central bank is an independent institution that focuses solely on monetary policy. And the central bank might have been in the limelight because of the foreign exchange issues. But from the presidency, the challenge of that media problem is that there's no feedback. How do we ask questions? For instance, I came on the program, we talked about the excess crude account being depleted to about 300 million. The next day, another press release came that no, the excess crude was not touched. So what exactly is going on and how this is being presented is not exactly building confidence for investors. So what people are doing is that people are holding back. And if you hold back, you're going to slow down economic growth, you're going to slow down investments, you're going to slow down opportunities. The growth that we've achieved, as you've seen, we've lost about 1.1% of our growth, which is pretty significant. There are delays in investment decisions. Clearly, you're going to find impact on employment. And the confidence that we need to get the economy moving is very critical, because it is the confidence that will stabilize the foreign exchange markets. Once confidence returns into the markets, then all the losses you're seeing on the stock exchange, the depreciation of the foreign exchange, let's discount stability from the pressure on the naira. We can look at the liquidity, but confidence would restore stability. And once there's stability, then we can begin to build on growth. So, but unfortunately, we have to write off this year, because by the time the ministers come back in, the next thing they're going to have to do is to start to work their budgets for next year, to be able to put it on sound footing.
We're going to talk about the budget later on in the conversation. You will on here for the next 30 minutes or so. But let's get back to this transition, as it were. Looking back, we're about 3 months or 4 months away now from the elections. Looking back over the last 4 months, does it not look like, yes, did we expect that this transition will be these, the transition was peaceful from an election point of view, but in terms of the fiscal, economic, monetary side of it, does it look like we were prepared for what we have on our hands at the moment? Were we? Were you, as an economist and a policy analyst and as a research individual?
Well, we must, you see, at this time, you see, we need to become philosophical.